Hey everyone, and welcome back to the channel. If you're new here, I break down what's happening in the stock market in plain English, so hit that subscribe button to stay informed. This week was a strong one for investors. The S&P 500 climbed 2.3%, the Nasdaq pushed even higher, and we got some major news that moved markets. So let's break down exactly what happened and what you need to watch going into next week. Let's start with the big picture. The S&P 500, which tracks 500 of the largest U.S. companies, gained 2.3% this week. That's a solid move higher, and it puts the index back near some important price levels we'll talk about in a minute. The Nasdaq, which is heavily weighted toward technology companies, did even better, climbing around 3%. That outperformance tells us that investors were particularly bullish on tech stocks this week. Meanwhile, the Dow Jones Industrial Average, which tracks 30 large established companies, rose about 1.8%. Still positive, but it lagged behind because the Dow has fewer tech companies in it. So across the board, green arrows. Investors were in a buying mood. But why? Let's look at the three biggest stories that drove this rally. The first major catalyst was the Federal Reserve's decision. On Wednesday, the Fed announced they're keeping interest rates unchanged. Now, if you're not familiar, the Federal Reserve is basically the central bank of the United States. They control interest rates, which affects everything from mortgage rates to how expensive it is for companies to borrow money. Higher interest rates generally slow down the economy, while lower rates stimulate growth. The Fed has been holding rates steady for a while now, and investors were worried they might raise them again to fight inflation. But they didn't. They held steady. And more importantly, Fed Chair Jerome Powell hinted that if inflation continues to cool down, rate cuts could come later this year. That's music to investors' ears, because lower rates typically mean stocks go up. When borrowing is cheaper, companies can grow faster, and investors are willing to pay more for stocks. So this was definitely a positive signal for the market. The second big story was Apple's earnings report. Apple announced its quarterly results after the market closed on Thursday, and they crushed expectations. For those unfamiliar, earnings reports are when companies tell us how much money they made in the previous 3 months. Investors compare these results to what Wall Street analysts predicted. If a company beats expectations, the stock usually goes up. If they miss, it usually goes down. Apple not only beat revenue expectations, but they also reported strong iPhone sales and growing services. Revenue services include things like Apple Music, iCloud storage, and the App Store. This is important because services have higher profit margins than selling physical devices. Apple's stock jumped over 5% on Friday after the news, and because Apple is such a massive company, it helped lift the entire market higher. When the biggest companies do well, they pull everything else up with them. The third story is really a continuation of the second one. Broad tech sector strength. It wasn't just Apple doing well. Microsoft, Amazon, Google's parent company Alphabet, and Nvidia all had strong weeks. Tech stocks have been on a tear lately, driven by excitement around artificial intelligence and strong earnings across the sector. Companies are investing heavily in AI technology, and investors believe this will drive massive profits in the coming years. Now, some analysts are warning that tech stocks might be getting a bit overheated and due for a pullback. But for this week at least, the momentum was clearly positive. Money was flowing into technology, and it lifted the overall market. So what should you be watching next week? Let me give you 3 key levels and events. First, the S&P 500 is approaching 5,200. This is a significant resistance level, meaning it's a price point where the index has struggled to break through in the past. If we push above 5,200 and hold it, that's a bullish signal that could lead to more gains. But if we get rejected and bounce down, we might see some profit-taking. Second, watch the 50-day moving average. Without getting too technical, this is just the average price over the last 50 days. It's currently around 5,150, and as long as the market stays above this line, the overall trend remains positive. Third, we have some important economic data coming out next week. We're getting the monthly jobs report on Friday, which will tell us how many jobs the economy added. Strong jobs numbers are usually good for the economy, but can sometimes worry investors if it means the Fed might keep rates higher for longer. It's a bit of a balancing act. So to sum it up, strong week for stocks, driven by the Fed holding rates steady, Apple crushing earnings, and continued tech sector strength. Next week, we'll be watching those key price levels and the jobs report. Before you go, remember, I'm not a financial advisor, and this is just educational content. Always do your own research before making any investment decisions. If you found this helpful, smash that like button, subscribe for weekly market updates, and drop a comment below telling me what stocks you're watching. I'll see you in the next one.